Hello everyone, good afternoon and welcome to the PivotBoss Monthly Market Outlook. I am Frank Ochoa, aka PivotBoss. Thanks for joining me this evening. We're going to look at the various markets here over the next 45 minutes to an hour, looking at various futures markets and looking for near-term trade ideas and also ideas that could last us into the end of the year as we head into Q4. Today is the first trading day of Q4, Tuesday, October 1st, 2019. There's some seasonality tendencies that we're going to talk about as well. We have some candidates that we're going to go through as well, and then also there's some general stocks of interest that we'll take a look at. So a lot to cover here today. If you have any suggestions on what you'd like me to look at, as always, you can feel free to chat it in the box there, and I'll take a look at that as well. But number one right now, just taking a look at crude oil right off the bat here. Crude oil, for the most part, has been trending downward after topping out above 60. It rejected prices above 60 and fell back as low as 53.05 today. That was a target we talked about in the monthly and the pre-market report rather this morning, and then today when we were in the trading room, the pinching of the bands here and how price was compressed here, we knew that there could be a 1.3 handle drop from 54.30 back toward 53, and we got to 53.05, so we got some very nice movement. Just now we got the API report. The API report comes out after the market closes on Tuesday night and can give a little bit of insight into what the EIA report will be the next morning, on Wednesday morning. So again, we have a little bit of strength happening already on the heels of that report there as this thing bounces and approaches VWAP for the day. Again, a bounce at 53. 53 is the next support level down. Below 53 is the 50 half key level. So let's take a look here at the higher time frame chart. What I'm going to do here, let me grab. Alright, let's grab this list over here and bring it out over here. Alright, good to go. So here's crude oil. So far this year, price has held above 50 virtually the entire year. So you can see how price, here's 50 right here, price, that's 50 right there. It traded below it the first 5 trading days of the year, maybe 6, broke above it, and then held and held and held, and then has continued to hold here as well. Those are the 53s. We saw a big gap up that occurred here, and that was on the news that some Saudi oil facilities had been bombed with drones. I mentioned after that, on that day, that if price could not stay above 58.50, then we would likely rotate down to fill the gap. And that's what happened Friday. We finally filled the gap Friday. We dropped Monday, and then today, Tuesday, here dropped a bit more, getting as low as 53.05 and finding a little bit of initial support here off the 53.05s. So if you look at this chart a little bit further back than just this year, there's a couple of things that stand out. Number one, this is a strong high that occurred up here. We had that as a sell candidate before. From 76, this thing dropped all the way to 42.5. Pretty tremendous line drive to the downside. That, while being likely outside the standard or outside the norm of what a drop would be during this seasonality, is in line with seasonality. Seasonality tends to suggest that weakness occurs in Q4 for crude oil. We are entering Q4. That weakness can usually start in the last week of September and into the first week of October. And so that's about what happened last time around, and then we dropped into the end of the year. You usually see a drop into about mid-December. So this was in line with the seasonality of selling pressure, but perhaps the size of the move was outside the norm. But for the most part, we are seeing the same type of price action that could play out this time around as well. If you look up here, there's a strong high. You have a strong high there and a strong high here. Each time we've rotated down off those highs. This could be it. for the end of the year. That's about as high as we get. That was 63s. We could be looking at a continuation downward that tests 50 half, which is here. And because we haven't really been able to really break through the upside and run, if we can't hold 50 half, then perhaps we come down here and test those 42 half lows. So this is going to be very interesting to see how the market plays out heading into the rest of the year. But I wanted to bring up a seasonality chart here by going to seasonality. Over here, I'll mark this show price as percentage. And this is just giving us a 5-year look back, okay? When I look at seasonality, I like to look at different splits of time. So I'll tend to look at a 3-year, a 5-year, a 10-year, and a 20-year to see how it's been, because maybe a trend is forming, or shows a trend in the 3-year, but over the last 5, 10, and 15, 20 years back, you don't really see that trend much, so it might be an anomaly. So I like to look at various segments of time and see what it looks like. But this is about right. You look right here, that's the first week of October. This right here is the last week of September, first week of October. That's the high. And from that point over the last 5 years, this has been the average trade. It's averaged a drop of about 10%. We're down about 5-6% here. We're down about 16% here. So an average 10% drop from where we currently are. If you look over here, that's the current price chart. This is the 5-year average. This is the current price chart. That's a strong high. That's the one we talked about. And look how much we've already dropped away from that level. Perhaps we see more weakness here into the end of the year. And if we see 10% more from where we currently are, perhaps that brings us, back down the line somewhere into, say, this zone here, which is about 49s. That would be an additional 10% from where we currently are. So we'll see how that plays out. Actually, that's more than that. That's a +6. This is a -15. So that's even more. So that looks like 20% right there of a drop. So perhaps we're dropping quite a bit more than that. So either way here, this thing could be looking at a seasonal tendency of weakness. And this market has already shown a pretty strong pivot high. Now again, that's a 5-year look back. What if we look back 10 years? You come over here to the 10-year chart, and this is what it looks like over 10 years. You can see right here, this is the period of time we talked about. Last week of September, first week of October, and it's down. That's 10-year look back. If you look back again over the last 3 years, so let's shorten it up a little bit. This is what it looks like on a 3-year. First week of October, last week of September, and that's the drop right there. So again, based on seasonality, we may have more weakness coming. So what does that mean in terms of strategy and how to approach crude oil moving forward? I would say right now, because we've hit 53s, perhaps we see some sort of bounce here. Any bounce that comes next could be an opportunity to sell it and ride the wave downward toward 50 half and perhaps even lower. So right now, we'll see if this thing gets a little bit of a bounce here, since we're kind of after this sell-off here. But that next bounce into the pivot range or what have you here could be a great selling opportunity. Now one thing here that I didn't even discuss yet is the key range. The key range develops here when you have a strong pivot high or low. In this case it's a high, so price rallies until it finds that strong high, and then it cannot go past it again, and instead it turns around and drops tremendously until it finds a strong pivot low. Once it finds that strong pivot low, it turns around and goes back to the midpoint of that range, and then you have yourself a key range. That key range gives us important levels here. So now we have this level that comes across, we have the midpoint of that range here, and then we have the bottom of that range. Two important trades that we look for when we have that key range is the fade at this end for a return back to the middle, or a fade at this end for a return back to the middle. Those are two high probability trades. Oftentimes you'll see price continue to the other side from this low and continue to this other side from this high, as we saw in both cases so far. But expansion as well. Expansion as well could be indicative of a continuation toward outside extensions or price targets. So if we were to break to the downside through 50.5, the next two downside targets are here and here. That's 43.92 and 37.24. So that's a big time level. You have the 40 LVN right there. That's significant as well. And one other thing, when you have an impulse range like this that gives us a key range, how long it trades within the boundaries of that range suggests how much energy it's building as well. This thing has been going sideways within that range for maybe 3.5 months. So that means when it is ready to break free, it's going to see a pretty significant move. So right now, this one right here, I wanted to talk a lot about this one to start off in terms of it being a potential seasonality play and also an expansion or a breakout play from this key range. So it could be pretty significant. Again, based on seasonality trends, this thing has downside likely ahead into the end of the year. I would say right now the next likely move could be a little bit modestly higher. This is your monthly pivot range. It could hit that zone and then drop through these lows. As soon as it breaks through 53s, this thing could be selling off quite a bit more. So that's the idea right there with CL. I wanted to talk a bit here about the ES. Oh, what are some trade options for this? Good question there. Besides CL futures. So yeah, USO is a way to go. Right here, this is a way to go. You really got to get your price and make sure you like the price and the volume available for USO. It can be a little bit gappy, but this is the one to kind of mirror crude oil a bit with. You can see right now it's sitting right on $11 here, which is kind of like that 53 level. Down here, 1050 is kind of like that 50 half level. And those two are the key levels right there. Here's your upper pivot range. So again, if it were to bounce, you sell it. You could sell it to go down. So that would be, if you didn't want to trade CL futures, then USO would provide a way to trade it as a proxy there. So this is one that again lines up with what we've been talking about. Here's that first day gap up with a strong top, breaks through the low here and fills the gap. So those are all the various things that line up with crude oil. All right, take care, Sandy. All right, let's take a look here at the ES. So I wanted to talk about the ES here from a higher time frame perspective. The ES had an outside day down. It had a rejection of the previous session's high. These are things we talked about in the pre-market report this morning. That's our free pre-market video. And then in the trading room this morning, we saw it happen live right there, the rejection on the news. That was an aggressive sell-off, and we knew right away with the way that the ES rejected that it would likely be an outside day. And so it became an outside day eventually, and that was a good way to go. A rejection of the high, a break through the low, and it continued to push lower. Big time outside day. NQ was lagging from that respect, but again, being that NQ was lagging, it allowed for an opportunity to jump in a little bit later and still partake in the move down, because it eventually dropped pretty good and turned into an outside day on its own and hitting the 7,700 target. So right now, the big level to watch, and it makes it kind of difficult here, is going to be the 2940 level. And as it would turn out, that's today's close, 2940, or that's right where it's at, 39.75, 2940. It's right in that zone. We've talked about before, and this was last week, that this level right here was important. That's 2980. If we couldn't hold 2980, then that could open up a return to 2940 and perhaps across the range back toward previous support. That's 2820 to 2800. Those are two important levels. And so when we go by market structure, this is one zone, right? 2820 support, 2940 resistance. But then it breaks out and transitions into the next highest market structure, and that's here. And then it couldn't get through it at the top, so it comes back. So right now it's at the cusp on whether it's going to break down and drop into this part, or is there going to be some sort of rejection that brings it back up. At the moment, 2940 is very important, and the market already appears to have made up its mind. You can see right here, this is a rejection. That blue dotted line is the previous month's close price. It has already taken it offered. The bottom of the pivot range in this move here today, or the previous move last month, the bottom of the pivot range is the midpoint of the previous month's high and low. So to break below the midpoint the way it did would suggest that the only other important price level to test would be the previous month's low price right here. So this level could be very important to the ES very soon. Additionally, here is your 200-day moving average coming up to provide support. It has rejected and returned to that level, dropped below it and rallied. Rejected, dropped below it and rallied. Rejected, dropped below it and rallied. And it's done that many times just over the last few months. So a bit of a rounded top, multiple failed highs in this move, and now showing rejection through the previous month's midpoint. So if we're talking short-term directional conviction for the ES, I would say as long as price remains below 57.5, 29.57.5, or just call it 29.60 to be even here. Below 29.60 suggests a return back to 28.80. And then a shot to go as low as the lowest edge. Let's tie this back together now one more time with key range analysis. The key range analysis here, you have this key range high right there, and that gives us that high. That's 29.61 quarter. You have this low right here that comes across. That's 2800, 27.99.75, and then you have the midpoint right there. Okay, this is the key range we've been using since the April-May move. So when we got to this strong low, we knew we had a shot to get to the midpoint. Down here, we got outside the low, and when you get back above it, that's your target and that's your target. Then it tries to sit above here and fails. So at the beginning of August, I mentioned if it fails here, it opens up a test at these two levels. And then over here, you reject. That has the potential to go back to this level and then back to this level. And now here it is again. It's sitting up here at these highs just like last time and is dropping through 29.60, that high. So this and this could be your next targets. High probability target, and then this one is your longer term target. Again, with the way that the market moves and is, you know, as much as the algos start to participate now, this move can be done in 2 to 3 days. Whereas before it would take a month or so, you know. So this, we'll see how aggressive it is this time, if at all. But 29.60 is the major level. I would say if price bounces up into that zone tomorrow, it may offer an opportunity to sell it for a shot at looking at 28.80 and perhaps 2800. So we've already seen the market play off of this key range multiple times. Are we about to see another move again? So I would say 29.60 in the ES is going to be a big level to watch tomorrow. We've already closed below the midpoint of last month's range. Again, that suggests a move down to that first target anyway. So that's how I'm looking at the ES right now. If you wanted to look at the NQ as well, very similar price action, but this one is much more coiled. Look how compressed this price action is here, and it's kind of gone this way. I mean, this is quite a compression. Today's failed high, very narrow pivot range for the month. That suggests that an increase of volatility could be seen this month. So we could be looking at major movement here one way or another. It's been flagging down kind of like this, so there could be an opportunity to rally. That occurs above 78.40, 78.50, right? Those highs. It needs to break those highs and get going. But the way it looks right now, it's rejected the previous month's close, the previous month's midpoint. So the only other level to test here is that low from the previous month. That's 75.80. 200 days below that at 7,500. And then again, here's your key range high right there. It failed here, so it dropped down the way into those bottom targets. Here it's happening again. That's your first target. Your second target is right here at 72.90. So that's the same blueprint. When we talk one last thing, because that's the short-term idea. So to begin October, to begin Q4, perhaps there's a discount to come. It's looking that way right now. There's a discount coming. This thing is about to perhaps roll over a bit. But when we talk about how to play this into the end of the year, that discount could serve very, very useful as a cheaper buy-in for a late year rally. So when you talk about the market here, in terms of seasonality, I talk often about this in this time frame of the year, in both July, August, and then again September, October. It's kind of when I talk about this idea and concept, but in August you tend to see some sort of hard sell-off. Not every time, but when you do, and it puts in a strong pivot low like this, that low can tend to be the low for the rest of the year, all the way to that dotted line. Right? If the August pullback is steep and it has a strong low, that low can be the low for the rest of the year. And now any pullback that occurs can be a buy the dip ahead of what could be a continuation all the way to the end of the year. Now sometimes it's a strong finish, sometimes it just kind of hangs and does this, but you can use this prior pivot as an anchor. So if we do discount here and do pull back some amount, say back to the 200, and we're below the previous month's low and we're hanging out down here as we did, this may provide a great buy-in between 28.50 and 28.60 for a shot at buying the dip ahead of what could be a continuation into the end of the year. So again, that's a seasonality tendency that happens. It's not always perfect, but when it happens, it's a strong August low can tend to hold. So let's take a look here. This is one seasonality chart here, and I'll start moving off into other things here. Let's go right here. We've had an atypical past few years. So this is a 10-year look back, and this tendency goes back. The last few years have been a little bit more atypical. If you go back 10 years, which includes the last few years, it's not as clear, but it is clear. So this is a 10-year curve. It's been very bullish overall. This time frame right here between here and here is August. That's your August pullback. If it's a good one, it can tend to be the low the rest of the year. If it is a strong pullback, this is October right there. So that pullback can tend to be a higher low ahead of the end of the year. Another seasonal tendency. So we talked about seasonality here with crude oil. Now we're mentioning seasonality here with the ES. And again, if we do see that October pullback, it could prove to be very useful heading into the end of the year as a buy-in opportunity. Now keep in mind, this is something I mention quite often in the trading room. Keep in mind that this is an atypical market. There's a lot of headline risk, a lot of tweet risk, a lot of geopolitical risk, impeachment risk now. We have Ukraine, we have the Russia, we have Saudi, we have Iran. I mean, there's lots of various things that could provide headline risk at any moment. So again, when you're dealing with averages and what the market tends to do on a seasonality basis, those things can tend to go by the wayside when you have an atypical market with atypical headline risk. So again, we'll have to see if the market remains within this current structure. But that's a strong August low. This pullback in October could be great, and that could be a great buy-in for a late year rally. This market, despite big corrections at times and quick ones, has never been too far away from an all-time high. The Fed continues to be supportive. So again, I don't know if this thing will fall off the deep end heading into the end of the year if it hasn't already. So it's probably more of the same. So we probably drop back some degree here and then bounce back into the end of the year to close somewhere in that zone. So that could be about what we do here heading into the end of the year. So just keep that in mind. All right. I did want to talk about gold now. I know I'm going quite a bit here just on a few futures contracts, but these are the most important here that's had quite a bit of action here lately. Gold has been tremendous. We had the bottom back here on that day and knew that on this rejection that there was a good shot to reach that pink line. We got there. That ended up being support as this thing coiled up. On that bullish outside day, we knew that there was a shot to rally to 1360. And at 1360 to 1365, we knew that price had not been above that zone in 5 to 6 years. So if it broke through, it would be significant and would open up a path to 1525. We got there. We've seen a little bit of rounded type of behavior here at that area, a little bit of a head and shoulder type of pattern at that area. But the market remains in an uptrend overall. It's testing in a major zone of support, which is a previous or current LVN between 1460 and 1480. So that's a big level there. But I would say right now, if price cannot get back above 1490 pretty soon, there could be a bigger pullback. Again, I hesitate being too bearish on gold because it's been so bullish. But according to market structure and those types of concepts, 1490 here is a very important pivot. It's kind of this zone right here. We broke below it yesterday. It made it resistance today. That doesn't mean it can't get back above it and climb back to these highs, because it certainly can. That would be a solid rejection in an uptrend at an LVN. That'd be a great trade. The way it rejected the previous session's low, which is also the previous month's low, right in line with a rejection you'd like to see. Additionally, previous month's close and low very close, and it rejected. So that tells you that, the midpoint could be in play. That's 1515. And if it pushes through the midpoint, then the high's in play. So this is a really solid zone to either watch for a failed push down and a bounce, or if price cannot get back above 1490, then we head lower still. So 1490 is the key. Can it get back above 1490 to 1495, somewhere in that zone? If not, then we easily have a rotation back toward a couple of key levels down below. 1440 could be retested. That's your FOMC key level from July 31st. And then you could have a test somewhere in the 1380s as price approaches the 200-day average. So that 1490 is going to be very important. When we look at a very long-term look here, which we've done with gold, which is why we had the 1525 on our radar so quickly, is because here's the big time frame chart for gold. You have the 1525 level right here. Above that you have 1800. You got the all-time high above that one, the 1930s or whatever that is. This is your 1375 breakout point right here, and then to top it all off, you had the big rounded bottom. Value was here, took it, bid, and there we are. So when you really break it down into it's the big higher time frame pattern, this pullback is still well within reason to see this pullback and still provide more upside. 1375 is the big major level, and as long as it continues to stay above 1375, there's a shot for 1800 down the road, because this is market structure right here between 1525 and 1800. And if price can find acceptance above that 1525, it goes to the opposite side of that range. So 1800 could be the next zone if price can stay above 1525. It's got to perhaps build out some price action here for a while. Maybe then after building some energy it can go. But above 1375, I think long term still has a price toward 1800 that could be tested. So right now this is going to be very important to see, can the recent pullback find a strong low and then maybe either build a range and fuel for another move, or what happens here, because again, we may see more weakness, but as long as it stays above 1375, more upside could be seen. So good ones there. I did want to talk about some individual stock candidates right now as well. Number one, I just got into CAH, so I'm going to go with something that's more actionable because I just got into CAH, and it is very reminiscent of KRE. So I just took this KRE trade a couple days ago. So I'll discuss KRE and then come back to CAH. But KRE has been trending downward. This is the regional bank ETF. This cyan line right here is the 200-day moving average. So that's the 200-day moving average right there. Right there, price would rally and build a range above the 200 and fail. The retest would fail. And it comes up here, builds a range, and fails. Then it comes back to it and fails. And it builds a range and fails. And so it did it again here and dropped. And then on this day, it gave a signal. That was a rejection right there. And so that's the day I entered at the close. And I bought the 54 puts. So the November 54 puts in the money. 54 puts. The next day, it gave a perfect retest entry at the midpoint of the rejection day, which is one of my entry techniques. Sometimes I'll get in here, sometimes I'll get in here, sometimes I'll split the difference. But in this case, I got in the prior day. But it gave a great entry the next day. And then today, it opens above the previous session's high, but fails. Again, at the midpoint, and then breaks through 3-day lows and becomes a huge stop run day down 2.25%. Just a big move. But again, it's all based on price failing to hold above the 200 average and then failing. Retest failing. Retest failing. And when it fails, it's been going to 50 every single time. Here, it went to 50. Here, went to 50. Here, went to 50. And here, it's very close. So I think we have a strong shot to get to 50 and to get somewhere into the 49.50 zone here over the next week. So I took that 54 put and still in trade. Now when you have one big windfall day like that, I always mention to our group it's always a good idea to take something off the table. I did not in this case because I believe that a second strong day of weakness is coming for this one, but then I will likely take profits. If we do drop down pretty good toward say 50.5 or lower, then I'll probably take something off. But this is a good one. Now, if we go to CAH now, very similar prospect here. It's taking its time coming up right now. Very similar prospect here. Again, you can see this one has a 200 moving average that's moving lower. Here's price above it and fails. Here's the retest and fails. Here's price above it and fails, right? And then it gets over here a couple of times and fails. Over here, got above it and failed. And today, look at that. That's the exact same rejection in the exact same spot as the KRE ETF that we were just looking at. This is where I said I entered the in the money idea. And then I entered at the end of the day. Price went up to hit the midpoint the next day, which is a better entry. And then the day after that, it dropped hard. So I did get in again at the end of the day on this one. I filled the 47.5 put for November. So instead of going at the money, I was slightly in the money. So 47.5 is about right here. It was slightly in the money. Rejection and now dropping downward. So again, with this one, I think it has a good shot to drop again and get somewhere into the 42 to 44 zone. Now I can quantify that target by coming over here and going bear targets and clicking OK. And what that's going to do, it's going to use the PivotBoss ADR targets to calculate the average monthly range targets to the downside. So from today's high, that's where the red dotted line is. It projects these two lines here, that red line and this red line. This is 75% of average range. That's 100% of average range extended from that high. So if we believe this is the high of the month, we can take average monthly range over the last 10 months and we can project that lower. So this one has somewhere between 42.11, which is here, and 43.68. That's a 4. So we have a good shot to get somewhere in that zone by the end of the month. Again, I don't think it'll take that long. These trades tend to take somewhere between 5 and 10 days, sometimes 3 weeks. But I got in anyways. The retest entry will be 47.70s tomorrow. So 47.73 could be a retest entry. It's the exact same entry that I teach in my courses like PivotBoss Masters. It's the exact entry we use in the PivotBoss Premium Trading Room. We talked about it in other courses as well, like Swing Trade Pro 2.0. It's an entry point I've used for a long time. So again, if you look at KRE, after the sell signal here, you wait for the next day, it goes up to the midpoint, you enter here, and now there's less adverse excursion and more positive excursion. So that's the idea tomorrow. If you like the CAH trade idea, November 47.5 puts. You can also go 50 puts as well. 50 was quite a bit more expensive because it was way up here. If 50 would have been here, I probably would have went 50, but instead it's 47.5, which is here, and that's fine too. So I'll go at the money and let the thing work in my favor. Now, here's one thing to keep in mind. I mention it every time, but again, if there's someone newer to the room or newer to the webinar here, I definitely like to repeat myself just in case. Whenever I do enter a trade like this, this midpoint of that rejection day bar becomes my pivot, my anchor level. So if tomorrow price were to rally and it closes above that level, I'd be out of that trade. So I'm not going to hold a stop above the high or above this high, or I'm not just going to hang on to the option. If price closes above that pivot, I want to be out of that trade. Additionally, if tomorrow, say price gaps up to 48, if price opens above where the entry is supposed to be for the short trade, then I will negate that trade and I will not enter it at that moment. Maybe later on, but not at that moment. Because if it opens above the midpoint like that with the gap, chances are it starts to do that. So a couple of caveats there. One, on no entry, which would be a gap at or above the midpoint. One is on the exit, say you get in, but then price closes above the midpoint, I'd be out. And that's for the current day or any day after. And then from there, ideally you want to see lower highs, lower lows day over day. So just a couple of things to talk about there for CAH. I wanted to talk about another trade here that I did last month. That's Teradyne. Teradyne here has one of those setups that we talk about often. It's the one I wrote about in my book, Secrets of a Pivot Boss. It's the inside value breakout. That's when you have the pivot range for 1 month is inside the pivot range from the previous month. Additionally, this pivot range, the current month, is narrow compared to the prior months. And that narrow compression of that pivot range suggests that you're going to see expansion, or at least an increase of volatility. So we look for this setup at the beginning of a month because it can tend to point our direction to a stock that's about to see a breakout. So last month I didn't host a monthly outlook, but this is an opportunity that we posted in the room, and I got in at the end of this day, and I bought the out of the money 55 calls. So out of the money 55 calls, price closed somewhere in the 53.50s or so the previous day, and then it gaps up out of range and starts to run that day and pushes through 55s and never comes back to 55 after. So very quickly this thing rallies and sees more expansion. Over here, price hits the high, and when it hits the high, that's when I take some off the table. It was more than a double. Don't quite remember what it was, but I'm still in the trade. So I guess the entry here was $1.75 and took some off at about 380. Still holding the second half of that trade, which I'll talk about in a second. But number one, with this idea, you want to take some off when it gets to the prior pivot high, and then you can hold a portion to see if it has another leg higher in it. After you see that breakout, here's your pivot range for the next month. Price tends to pull back and then takes off for another move. So I'm holding on the second half of the trade, looking to see if it has more upside. I had an initial target between 60 and 61. Perhaps this thing can best that if it can start the month pretty hot. So we'll see if that has it. Now the reason I'm talking about this trade is because I have now scanned through some opportunities, and I have some of those that have popped up. And let's see. Let me flip through some of these. It's not that one. Let's look at, oh, that's the wrong side there. Okay. So here's one. This is brown and brown. This is bro. And this one has been trending up all year. Very nice trend to the upside. A little bit of a rounded top. There's your inside value relationship. You see that pivot range? It's very narrow. It looks like one thick wide bar or line. It's inside the previous months. Looks how narrow it is compared to this month and this month and this month, and even the other months when it was narrow. It's like this. And it has 2 months of compression ahead of that line. Today we're seeing a bearish outside day develop where price was above yesterday's high and then rejected the close below it. Very bearish as well. Again, any pullback into 36 could be an opportunity to sell it. This thing could see a downside break back toward the 200-day average, 32.77. So this one looks like expansion could be ahead. It looks like it's deciding to break to the downside. Again, if it stays below 36s here, that could be a retest entry for what could be a push back to value. It hasn't tested the 200 since February, and again, if we're going to see a late year rally, perhaps a little bit of a discount back to value could provide that bounce. So that is BRO. This one is APD. Another big one that's compressing over the last few months. This one has been compressing for 3+ months, 3.5. Very clear support here at about 215. Rounded top. This one is not an inside value. It is a lower value with a change of bias, but even then it took it offered. So this thing is very weak as well, at least today. It's had a series of lower highs. Again, if it breaks through 210, 215, how much energy will be released to the downside? This is one of those that took off tremendously throughout the year, but when it broke through 170, all of this became very ill-traded price action, whereas all over here was a big broad market. So perhaps there needs to be a revisit of prices all through here into the 170. This is APD, Air Products and Chemicals. Again, big time uptrend. Now, is this a distribution phase up here, or is this a reaccumulation phase? If it's a distribution phase with the rounded top, again, 215 to 210, if it can't hold that zone, we may see a markdown that can take us into about 170. So that one right there is another one to watch for a potential breakout opportunity. Here's another one. This is Fiserv. Again, bullish trend, but kind of holding up here in this narrow compression. You have an inside value relationship here. Not super narrow on this month, but it is narrow 2 months running. You can see the kurtosis over here off on the profile, steep slopes on both sides of the peak there. That tells you that things are really tightly compressed. Energy's building. and we could see a break pretty soon. Again, if it were to break to the downside, the 200-day down here around 92 becomes a really good target. It's one of those zones here that just continues to be bought so far. So if it were to drop, maybe that provides a late year bounce as well. So right now, what's difficult about some of these is that we haven't seen the expansion on some of these yet, right? It's still in the range. And when it's still in the range, it's anybody's guess on when it's going to happen or even which direction. So I tend to be more hands off and just let it do its thing, let it break out, and then look to respond with an entry in kind on a retest. So that's kind of what's happening here with BRO and some of the others. You could see an entry. This one doesn't really have one just yet. Okay, this is ACN. ACN also has an inside value range here. It's also seeing kind of some weakness here. Also has some rounded behaviors, compression over the last 2 to 3 months. Also has the 200 down below. Again, are we going to see a move down and perhaps back up? How is this going to respond here? Because this compression has to release that energy somewhere. And we're seeing lots and lots and lots of stocks that look like this right now. I can click on Microsoft, and Microsoft has been looking like that. Disney has been looking like that. Oh no, actually, not Disney. McDonald's. So here is Microsoft. Look at this compression at the highs. Again, 2 to 3 months. This is 1, 2, 3 months sideways. 3 months of sideways price action. It's been trending up. At some point, it's got to get some movement here. And again, if it wants to go up down the road, it hasn't been going up here, 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 here right now. Sometimes it has to flush some stops, shake out the weak hands, and then get the thing going back to the upside. So again, a lot of these look this way right now, and it's going to be interesting to see which way they go first. There could be an opportunity to play the short-term wave down, followed by the longer-term wave up. All right, I wanted to talk about some stocks in general. Maybe not some that have patterns here, but just some that are story stocks here that you may want to keep an eye on. And one of them here is Tesla. Tesla is compressing tremendously here over the last several months. We've been talking about 2 and 3 month compressions right now in some of these stocks. This one has been going on for about 5 months. So you have this month, this prior month, there's August, here's July, there's June. The back end of this range here is May, and now you have this kind of compression right here that's really ready to get going one direction or another. That is a 5 month compression that could release the next 5 months, 3 to 5 months of trending price action. What I like about this compression is a couple of things here as well. One of which is the fact that it's building after a strong rejection on the 180 support level. 180 was like the last line of support. That was like, if it can't hold 180, this thing's really about to sink very, very low. It held 180. And it bounced back up pretty tremendously. Earnings took it way back down, and now it's been compressing ever since. But the 240 level is the other level here that is very important. So when you look at this chart, you look at 180 as a major CLVN and a bounce point. 240, 250 is kind of that next zone right here. And then the zone above is going to be about 360 to 380. So that's your band of resistance up here. Right, this is your band of support down here, and now we're compressing all right at that zone with higher lows, really strong higher lows, a bounce off the 180s. So if you look at this, if this thing can get back above 250, and maybe a catalyst here is earnings coming up later on in the month, if it can get through 250, it has a shot to go all the way back to the upper end of the range. This is your market structure range. It's building out all this energy at the bottom. and it could release it all the way across the range to 360 to 380 again. So that's very important here for Tesla. If it can get above 350 and find some life above that zone, you can see 350 is right there. You know, it's just having trouble staying above that zone lately, but it's coiling, and we'll see if it can get going. A couple of things that look good. Earnings could be a catalyst for it, and also the 229.30 VPOC has been bid. So VPOC shifted down here, and then it's taken it bid. So once you get VPOC to shift lower and value shifted lower, that tells you right now enough counterparties came in to defend value down here, and now perhaps an upward flow might be seen toward the upper HVNs. Lastly, the last thing I'll say here about Tesla, we have this impulse key range right here. So you have that low and this high. Impulse rally back to the midpoint. That's your key range. It's been compressing in the middle zone of that range. If we break to the upside, your two upside targets are here and here. So you have your 50% expansion target at 310. You have your 100% target at 355, which coincides with the 350 upper band of resistance. So it's measured. It's a measured move that could result in that target up there being reached here. If we can break through 250, breaking above 250 would be huge. And we'll see what it can do if it can do that. Now again, this one's been hit with headline risk in the past. It seems like there's not as much headline risk here lately as there had been. And if there's a failure to hold that 220, this recent pivot low, then this thing can get very ugly down the road. So again, you know, it depends on the catalyst here. It depends on how the market responds to earnings. If this earnings gaps, say through 250 here, it could get really beautiful. If it say gaps down here below 220, it could get really ugly very fast. So this one is a good one here to keep an eye on. We talked about Disney here and how Disney's holding. This one's interesting right now. It pulled back about 0.6% right now. It's sitting right on the 200-day average. Disney will be releasing its streaming service pretty soon. I believe the first week, maybe the first 2 weeks of November. So that's just weeks away now. I think it's going to be gangbusters here, but you can already see this thing has had a strong reversal from the 100 low and rallied all the way to 145. We now have this large head and shoulder pattern that's developing, and prices through the 130 neckline here at the moment, sitting on the 200, which has had a big rally here recently. It had been flat, chopping around it, and then exploded the slope up of the 200, and we're right at it right now. So this is going to be interesting to see. You know, again, is it going to rally into the news of that event and then drop? Has it already rallied into the news of that event, right? So we got a couple of things to watch out for. Major LVM below, 200-day here. One thing that tends to happen here, if this is going to remain bullish, that head and shoulder, that large head and shoulder looking pattern around the top, if it fails down here, it could be a major upside continuation. So if it has a failed breakdown, say between 125 and 130, that could be a huge rally back toward highs. So this is going to be one to watch here. It could pick up pretty soon, depending on how it works off of the 200-day. Another one I wanted to talk about here is eBay. So this one's eBay. This one has had quite a move overall to the upside lately. Rallied from the December lows of 26, got up to 42s. Very strong double top at 42 here. A little bit of a rounded top. Look at the support coming across the bottom, 38.5. Failed high today, and that failed high also occurring at the pivot range, which is lower value. 200 days just below, and that 200 day has been bid so far this year. But it's so close with so much energy, man. If it breaks 38 with a full head of steam, how much weakness will this one see? You got earnings coming up here pretty soon. But this one has a ton of energy. And again, as I mentioned often in the trading room, these rounded tops have not been as powerful in the current market as rounded bottoms because the market has been mostly strong. Even when the market has a pretty big correction, it tends to bounce back and just keeps on going. So while this is a really solid rounded top, it wouldn't surprise me to see some sort of quick drop followed by what could be a bounce into the end of the year. So right now, going to keep an eye on this one for expansion. It looks like the first wave is going to be to the downside. Failed high today. You have a rejection at the pivot range and a lower value relationship, and also a rejection of the previous month's close price. That could put some pressure to the downside here in the days ahead. So that's going to be one to watch. And I also like Team. Team has been one of my faves to trade. This one has been trending higher very nicely. You can see right here, very clear LVN. That's right at the previous month's low. And it's also near the 200-day. That's a very important level. That's the 120 level. Again, another one that's had kind of a rounded top behavior. It's had a failure here and dropped. If this thing breaks through 120, how much weakness could we see out of it? If it breaks down, will it be defended very quickly and return back up, as has been the case in a lot of these stocks? When it gets below the 200 in an upward sloping situation, it doesn't stay there long before it pulls back and continues higher. So this is one that if it stays above 115, between 115 and 120, it could be a big trap for a continuation higher out of that one. So this one has been very, very bullish Team, and has continued to hold the LVN here at 120. That's going to be the big level to watch. This Cube still a good one here. Cube breaking down. Okay, that's a pullback in a higher value relationship there. The last one here that I'll leave you with is the MSCI ETF. This one right here, bouncing down off the 75s. 75s has been about as staunch a resistance level as you can get to in a chart over the last 2 years. So it's had resistance here, it's broken back below it there, resistance all in here, there, and now here. And every time it's dropped from that level, 70 is right around the corner, as it was here and all in here. It's just what it does. So 70 is probably the next price target down below for this one. Again, it's probably already made up its mind that it's breaking downward because we had a big flush day today. It broke below the previous month's midpoint and took the previous month's close offered in the process. If it's going to hold below this low, then that is going to lead to weakness back toward the previous month's low price. So if it can't hold that previous month's midpoint, it goes back to the low. And every time it's been up here, it's dropped back towards 70 every single time over the last 16, 18, or 20 months. So we could be looking at more follow through to the downside towards 70. Again, breaking below the pivot range the way it has suggests more weakness to this level. Every time it's dropped off of 75, it's dropped to 70. And if you look at the current month's high and project the downward targets here, you get between 70.32 and 71.25. So that's a pretty good target zone here to look for. I would say tomorrow, any pullback towards 73.20, 73.40, anywhere in that zone could be an opportunity to get in cheaper for a continuation toward that target zone. So this one here, again, could be headed lower, back towards support. It's had many rotations down off the 75s. And again, it reminds me very similar to the KRE trade, where it's been in a very channeling environment, and when it gets too far overextended, it tends to drop back pretty quickly. So several candidates there to look for as we head into the end of the year. Again, I'd like to always say thank you for joining me this afternoon for the monthly market outlook. It's been a couple of months since we hosted one of these, so I'm glad to get back to it. I think there's going to be some great candidates here, not only in the days ahead, but also heading into the end of the year. So we'll see how it continues to play out. Everyone have a fantastic rest of your day, and I will see you all in the trading room. Take care, folks, and I'll see you soon.